Hello everyone, I'm Kunal Sodhani from Global Trading Center, Shinhan Bank, India, and we are here with another episode of understanding what's happening with the domestic as well as global factors. First, if we talk about the domestic factors, if we talk about flows, the flows for equities for the month of January has been negative to the tune of 71,000 crores, while if we talk about debt, it has been negative to the tune of 4,600 crores. So flows has been not in favor for rupee. While if we talk about the FX reserves data, they have been still dropping to the tune of $622 billion roughly. And we have already seen the highs of $704 billion from where it has dropped to. So in last 13 weeks, it has dropped 12 times in terms of the FX reserves. Also, if we talk about the other element in terms of the geopolitical factors and how the crude oil prices have been prevailing, it's still consolidating between 75 to $80 per barrel, but largely. Libya remains a concern. Their output remains still a concern there. What happens when we talk about the global policies which are lined up? So obviously Fed is lined up today, and we are anticipating a status quo. Obviously, major focus will remain on how the future trajectory will remain. Uh, but personally, I believe this will be a non-event where the anticipation remains of a status quo. Plus, Trump policies have not been unveiled yet in terms of the complete structure of how they have been planning for in terms of tariffs or taxations. There have been comments by the Treasury Secretary Besant of the view that they will be imposing tariffs starting from 2.5% and raising it to 20%, and also focusing on lowering taxation. And Trump has been also supportive of that. In fact, he has said that it should be even higher. So ideally, it will be a risk-off scenario coming into picture once again if these tariffs actually come into picture. And somewhere, we get a feeling that rupee may remain under pressure under the circumstances of remaining uncertain itself. So for dollar index, we're anticipating it's hovering around 108 odd levels, but we anticipate 107.20 acting as a good support, while we see it going back towards 109.50 odd levels once again. While if we talk about the 10-year US Treasury yields, they have cooled off from 4.8% to near 4.52% in anticipation of no rate cut. And plus, the rate cut is anticipated possibly as per the Fed Watch tool in May or June now, so which is a far off case. But if we talk about the policy of RBI, the measures which they recently took for the liquidity, so we are at a deficit of around 3.1 lakh crores in terms of the system liquidity, while the raise in terms of 1.5 lakh crores via the three measures. One is the buy sell swap, which the RBI has announced of $5 billion to be effective on 31st Jan, while OMOs and VRRs with respect to 60,000 and 50,000 crores each. So this will infuse liquidity to a certain extent, where the anticipation is of further tax outflows and GST outflows, which are lined up for the quarter end. But if these measures have been taken somewhere, the hope also remains that there can be a rate cut by RBI. They can be the front runners before even Fed. So I believe there can be a rate cut in the February policy as well. For dollar rupee pair, we have seen appreciation of rupee towards 86.20 at odds levels couple of times, but it has bounced sharply because of the tariff feeds coming in between. Overall, the band still remains 86.10.20 acting as a very, very strong support, while on the right side, 86.80 continues to be a resistance. So that's all from my side, friends. Thank you so much for your time. Hope you found our video valuable. Thank you.